Have you ever wondered how financial markets work? In reality, financial markets represent the backbone of any modern economy, as they enable interaction between various parties, including governments, companies, and investors. Financial markets are platforms where financial assets, such as stocks, bonds, currencies, and commodities, are bought and sold. Let's take you on a journey to understand how these markets work and the factors that influence them. What are financial markets? Financial markets are platforms where financial assets are exchanged between investors or between institutions. The primary goal of these markets is to facilitate the transfer of funds between parties. Financial markets are divided into primary and secondary markets. Primary markets. These are the markets where financial securities are issued for the first time. For example, when a company decides to raise capital by issuing new stocks or bonds for sale to investors, this process occurs in the primary market. Secondary markets. After securities are sold in the primary market, they are traded among investors in the secondary markets. For instance, when you buy a share in a particular company through a stock exchange, you are trading the stock in the secondary market. Types of financial markets. Financial markets differ according to the type of financial assets being traded. The primary types of financial markets are as follows. Stock markets, where stocks, representing ownership stakes in companies, are traded. The stock market is one of the most prominent and important financial markets that attracts individual and institutional investors. Bond markets, where bonds, representing loans made by governments or corporations to investors, are bought and sold. The bond market is generally considered more stable compared to the stock market. Currency markets, Forex, where foreign currencies are exchanged. The Forex market operates 24 hours a day, and it is one of the largest financial markets globally. Commodity markets, where commodities such as gold, oil, and agricultural products are traded. These markets are critical in determining the global prices of these commodities. How do financial markets work? Financial markets provide a platform where buying and selling of financial assets are executed. These markets rely on supply and demand, with prices influenced by various economic and political factors. Here's how the process works. Supply and demand. Like any other market, financial markets are influenced by supply and demand. If there is high demand for a financial asset such as a stock, its price will rise. Conversely, if supply exceeds demand, the price will fall. Exchanges. Many financial markets are organized through exchanges, which are places where buyers and sellers come together to execute transactions. Examples include the New York Stock Exchange, NICE, and the London Stock Exchange, LSE, both of which are major global exchanges.